Okay, so let's first talk about the good news on the markets, at least for Mr. Price. If you're looking at stocks being included in the top 40, Mr. Price is on. We say goodbye to Able on the top 40. What is this likely to do for Mr. Price's stock?
Well, I think in the short term, a few days before you have a weighting change, obviously we understand that these indices need to be reweighted, and they've done a day or two before. They're not done exactly on the day. So from a Mr. Price point of view, you could argue that there was some buying, and from an African Bank point of view, there was some selling. But because both stocks are relatively liquid, you don't see such an amazing change in price. I think for
Mr. Price, in fact, on the day was down, I think.
Yeah, it's already been done, but we've seen a little bit of a uptake in Mr. Price's share price from about 120 to about where it is now. But I don't think there's much to read into that. I think a good example would be rather Palabora when they moved out of the Satrix Divi index because they don't pay a dividend anymore. Because of its illiquidity as a share price, we've seen some huge volatile movements there.
Yeah.
But in general, because the top 40 shares are highly illiquid, you don't often see a major change. So it's not something to put a finger on and point to. Yeah.
Let's talk about factors that really are being very evident in the market at this point in time. If you had to talk about resources shares, I suppose in South Africa, they seem to just be the ultimate proxy for risk sentiment.
Absolutely.
Risk off today, resources being sold off. Risk on last week. Resources being
risk on,
bought.
risk off trade, exactly like you said. So what's happened recently, the last 3 weeks, we've had QE3, which sent the resource index up over 10% in a matter of a week or so. And now we've seen almost a 5% decrease in that index. So it's certainly not for the faint-hearted. And coupled with the risk on, risk off worldwide view, you've got the local perspective from a labor force perspective, where you've got legal and illegal strikes. The point is, strike action is not good for anybody. It's not good for the workers, it's not good for the company, it's not good for the country or the economy or for the shares listed on the stock exchange. So it's a very difficult and unpredictable time to be in resources right now in the market.
But of course, if you get that right, it's a good opportunity to make some money if you're able to time it.
Absolutely. I mean, look at Sasol. It's down today when the oil price is up, and you might step back and think, well, what's going on there? I mean, I would say maybe a buying opportunity. I haven't heard of any strike action in Sasol. They've got good offshore exposure. The oil price is looking good. From a risk perspective, I would say there's more upward momentum there, and Sasol will benefit from that. It's still cum dividend. Whereas Anglo-American, you could understand, Anglo Platinum miners are, the workers are striking at the moment. It has a big impact to that mine. Anglo holds Anglo Platinum as one of their assets, and naturally you will get that negative factor coming through. So I think everyone takes it as a whole and just takes a whole big black mark through it, and everything is devastated. But within that, like you rightly pointed, there's opportunity, absolutely.
Let's talk about Caterpillar being pretty much a proxy for the commodity market. Well, that's what it's seen as, cutting its earnings forecast for 2015, and this kind of sending a shiver down the spines of those who are commodity bulls. Did you read too much into this? Does that mean anything for you when it comes to Barlow World and the outlook for that?
I mean, for us it was important. Like you said, it is a proxy. The share price was down in America. That does affect Barlow World indirectly as well. The machinery is used in construction of mines as well as general civil construction and so on. It all depends on where that growth's coming from. You need to understand Barlow World's Caterpillar deals mainly in Africa, parts of Russia and parts of Europe. So the European operations aren't doing well. We already know that, but I still think there's a large prospect for growth in Africa and say across Russia, whereas Caterpillar is taken from an international perspective. So I think Barlow World's got the pockets of growth where I still think
the pockets of growth are.
Oh, exactly right. Whereas Caterpillar internationally, it's going to be an averaging effect at the end of the day.
Tiger Brands up on the day, and we knew about this deal.
Correct. It's been confirmed.
Confirming it.
And like
63% Dangote flour.
Exactly,
mills.
and it's a big deal. I mean, Dangote provides the majority of flour and pasta basically for Nigeria, which is the big part of Tiger Brands' West African growth prospects. So it'll be a very interesting deal to see how it progresses. And of course, Tiger Brands buying out an existing company there certainly helps with the whole difficulty of working out of Africa. It's not an easy place to set up shop. But if you are partnered with a company that's been there for a few years, you'll buy out a company and still keep original management there, then I think you might have a winning formula. So I think Tiger Brands might have some great prospects offshore. However, locally we need to understand that we have food price inflation worries. We have margin constricting on the South African operations, and that could be difficult. So again, you need to look at Tiger Brands as a whole. You can't just look at this one shining light and say it's going to be great from now on. Yeah. It's still a difficult situation.
And the majority of the earnings still very much South African based. So from a short-term perspective, would you be buying the stock right now?
No, not from a short-term perspective, but I guess if you ultra long-term and you believe in the household brand names and you believe in African growth, I guess any good solid stock is worthwhile for the long term.
If we're talking about long term, perhaps we could talk about the paper makers.
Yeah, for goodness.
Sappi coming out saying it's retooling its Alpha-Feld mill over in Germany. That's to focus on the fast-growing market for one-sided coated paper. It's in fact going to be the leader once it kind of restructures the mill there. What are your thoughts on Sappi right now? It kind of continues on this restructuring phase.
Well, that's the thing. This is all part of the restructuring that's been going on for quite a few years. The mill, incidentally, is very, very small. It's not going to make a material impact on their results going forward, but it's just one cog in the great wheel of restructuring the European operations. If we remember, they shut down many, many mills and they're restructuring the ones that they currently have. Similar scenarios happening in South Africa. Unfortunately, Sappi dealt with fine-coated paper and that was it. And we saw that price come down tremendously over the last 4 to 5 years, and they needed to face that and restructure it. However, there's the chemical cellulose operation that they've got in South Africa, which is a shining light again in the dark. But it's many, many years, Sam, before things get right. So if you believe in the paper business, the pulp business internationally, Sappi is certainly something to buy with the idea of the restructuring having a material impact in the future. But there are many, many hurdles to overcome. It's a little bit easier to buy companies now that are making strong profits than trying to believe in a company that will in the future.
Exactly. So tomorrow morning, one stock that you would in fact buy?
Tomorrow morning, I'd like to buy some more Sasol's. I really would. I've been harping on and on about it, and hopefully I'll be proved right. It's been a very, very volatile company, and I've been happy to buy from 360 all the way down to 340. And you are rewarded with moves close to 398, 400. I think in the short term, there's going to be a lot of trading activity. There's going to be a lot of sentiment. There's going to be a lot of where's the oil price. But in the long term, I think Sasol's a winning formula. I think a great stock to have on your portfolio. And at current levels of 361, cum div, I think of 11 Rand 80. It's certainly a stock I'd like to see more of on my portfolios.
Thanks so much, Nicholas.
Pleasure.
Nicholas Sorour, Portfolio Manager at Sasfin Securities.